Okay, so let's talk about the late, great Charlie Munger. You know, the billionaire investor, Warren Buffett's right-hand man. But this story isn't about stocks. Nope, it's actually about a few apartment buildings and a landscaping bill so expensive, it seems kind of crazy. But buried in that bill is one of his most powerful business philosophies.
And that really gets to the heart of the puzzle here. Why on earth would one of the most famously rational, logical investors on the planet do something that just seems, well, completely over the top? What did he see about creating real value that pretty much everyone else misses? And let's just get really clear on the number we're talking about, $600,000. And listen, this wasn't for his entire portfolio of properties. This was just for trees at a handful of buildings. So you got to ask, what was really going on here?
Okay, to really get why he did this, we have to dig into Munger's core belief about where the real money in real estate actually comes from. I promise, this isn't a story about gardening. It's really a masterclass in how to build long-term, lasting value in a world where most people can only see short-term cash.
And here it is. This is the key. For Munger, buying the property, that was just a ticket to get into the game. That was the easy part. The real game, the place where fortunes were actually made or totally lost, was in how you ran the place. You know, the day-to-day execution. It sounds so simple, right? It's an idea everyone nods their head to, but almost nobody actually puts into practice.
So if that's Munger's way, what's the typical way? What's the approach that he just absolutely could not stand? Well, he had a very blunt name for it, a strategy he saw as a huge, you could almost say stupid mistake.
He called it milking the properties. And you know exactly what this looks like, right? It's doing the absolute bare minimum, only fixing things when they completely break, never upgrading anything, never making improvements, just trying to squeeze every single penny of cash out of the building right now. And hey, it might look smart on a spreadsheet for a little while, but trust me, it's a total trap.
And this lays out the downward spiral perfectly. So, step 1, you cut corners on maintenance. Looks good, cash flow goes up for a minute. But then the really good tenants, the ones who actually care about where they live, they start to leave. Pretty soon, you can't raise the rent, because who would pay more for a place that's falling apart? All those little repairs you put off start to pile up into big, expensive problems. And just like that, your big, valuable asset is just quietly dying. So Munger's whole philosophy was basically the antidote to this. He knew that to win in the long run, you had to do the exact opposite of milking the property.
And you gotta love this about him. He did not mince words. Talking about this whole bare minimum strategy, he just came right out and said it. That's a stupid mistake if you're a long-term investor. And for him, this wasn't about being a nice landlord or anything. It was just simple, cold, hard math. It was just bad business.
And this one sentence just sums it all up perfectly. If a property isn't actively getting better, it's quietly getting worse. There's just no standing still. In real estate, and honestly, probably in any business, if you're not constantly improving, you're decaying by default. You can't beat entropy unless you're actively fighting against it.
And you know who else saw things this way? Munger wasn't alone here. His famous partner, Warren Buffett, saw the exact same problem, but he came at it from a totally different part of the real estate world. So, Munger was all about multi-family apartment buildings. For him, the key to winning was top-notch, consistent management. Warren Buffett, on the other hand, was looking at single-family homes. And you know what he decided? The biggest thing stopping him from investing in them at a massive scale was that it was just too hard to manage them all reliably. So think about that. Two different types of property, but they both came to the exact same conclusion. It's the execution, the management, that's the real challenge, and the real opportunity.
Which brings us all the way back to the beginning. Let's finally solve this puzzle of the $600,000 trees. How does a massive expense like that actually fit with this whole philosophy of long-term value and disciplined day-to-day work?
Okay, so let's remember the details here. Munger and his partners spent this money, $600,000, really early in the game on just 4 apartment projects. On the surface, it just sounds like a luxury, right? Just a cosmetic thing to make the place look pretty. But it was so much more than that.
See, those trees paid for themselves many times over. How? Well, for starters, amazing landscaping attracts higher quality tenants, and those tenants, they tend to stay longer, which cuts down on the huge cost of turnover. It means you can command stronger rents, not just this year, but for years to come. All of this drives up the total value of the property itself. But maybe most importantly, it sends a crystal clear signal to residents and potential buyers, this place is managed with care.
So here's the big reveal. For Charlie Munger, this decision wasn't about feelings or just making the place look nice. It was a cold, hard financial calculation.
It was a direct investment into getting better customers and boosting the long-term value of his asset. At the end of the day, it wasn't aesthetics. It was just math. So, what's the big lesson we can all take from this? Because this idea is so much bigger than just real estate. It really gets to the core of where real, lasting value comes from in pretty much anything.
You know, it's so easy for all of us to get obsessed with the deal, the exciting moment, the big purchase, the product launch, the thing you put on the cover of the pitch deck. But what Munger's story shows us is that's not where the magic really is. The real value, the stuff that lasts, is created in the quiet, consistent, and often kind of boring day-to-day grind of just running things well.
And that really is the ultimate lesson here. It doesn't matter if you're running apartment buildings, a tech startup, or just managing your own career. The big, flashy moments, they come and go. The true lasting value is built in the simple, boring discipline of showing up every single day and just trying to make things a little bit better than they were yesterday.
So I'll leave you with a question to chew on. What's the boring work in your world? What's that unglamorous, day-to-day task that everyone else overlooks, but that you know if you did it consistently would build the most real, long-term value for you? Give that some thought, because finding the answer to that question, well, that could be worth a fortune.